And joining me on the podcast and live on videos, Vadim Alexandre, head of healthcare, SP Angel, with a jumper on. You need a jumper on in this weather. I'm in my office here with the heating on. It's been raining non-stop. Absolutely. I don't know what is going on with our weather system. Is it climate change, or is it just a temporary shift of bad weather? Because it's absolutely dreadful. I don't know what's like where you are, Vadim, but
It just rained. Yeah, absolutely.
It's
It's cold
awful. I
and it's
know.
cold.
It
Yeah,
is. It's the worst combination. It's
yeah,
cold and wet. I don't mind, just cold. It's fine. Get rid of the wetness. But there we are.
yeah,
So the market is. Let me just show you something, video. I quite like
yeah.
this. In fact, I covered. I did a webinar with my membership club on Wednesday nights. SharePickers.com, by the way, if you want to subscribe. I'm not taking new members yet, but soon will be. And one of the features I've got on my site, it's taken ages to come up with this, and this is the thoughts behind it. 60% of the best performing companies over 3 to 5 years, and not pop and drop stocks, are sub 100 million market cap. And I've looked at lots of companies and what the metrics are, and I've looked at super stocks, they're 10 bagged pretty much from that level. And they've all had certain things in common. Apart from the market cap, they've had growth, a most consistent growth over many years. And that's top line growth, which is, filtered down. And so I'm right, I'm going to create a little system on my site where we can pick up these future super stocks, hopefully. And so what I've done is filter stocks sub 100 million into growth, value, health, efficiency, momentum, potential. I score them all. So, and this is called my stock scores. And this is what it's like. So you can see 100 companies here, and they're colored depending on what they. You can order these by rank, growth, value, or things. So a very interesting company I looked at last actually, which is Sir Martin Sorrell's latest. In fact, he created WPP, and WPP was the biggest advertising agency in the world. And then he went on to this one, which is S4 Capital. And I talked about this last night. And it took a bit of a hammering. And if you look at the chart where it is today, this is very interesting. So I'll tell you why. See the red circles here? These are previous results. It's gapped down by 20 odd % every time it's released results. Okay. And yesterday it went down, came back up in the afternoon, went down by 15%, came back up. And today, big upside. Now it's above a 50-day moving average. It's not seen that for a while, apart from there, we gapped down after the news. But I think it's a turn here. It's a 250 million market cap, doing about almost close to $1 billion in revenue. Margins EBITDA by 10%. Okay, they've had a hard time because the advertising market is like that. But I said I think that's a good sign when you get something breaking up like that after results, when previously every other set of results is taking a hammering. That to me is a good sign. And I'm just looking on this. You can see here. Share price, the net asset per share is 150, all right, and they are 41 pence. In fact, they're 48 pence. There's updates in the evenings, and so you can see the full year here, 23. The top line growth has gone down, but operating profit's gone up. They've cut a lot of staff and stuff, and the value you can see is 0.2 sales. That's all it is. Price to book 0.28, EV/EBITDA 8, and so you can scroll down, and the forecasts here, the broker forecasts here are literally 87 pence. That's 12-month forecast. But I think it's a very interesting one to look at because Martin Sorrell put 53 million of his own money into this, and it's probably going to be his last ever business. So I think he's going to try and make a go of it.
That's good.
Are you with me?
I mean, yeah. No, sorry. I
So,
just for some reason I couldn't hear you for a second.
yeah.
But all those gaps, though. I mean, what happened there? What happened?
That's basically, the advertising market during recessions, as you know, certain areas are cyclical. And like I said, look at where it's been. So it IPO'd back here in 2017 at sort of 150 a share, went up to 850, 2021, and really,
Yeah.
multi-billion pound company.
Yeah.
And now it's come down to in fact, even here, where it gapped down, this is where results came out. And of course, said, oh, we're not achieving growth, because they do achieving excellent growth here.
Yeah.
But of course, when recessions happen, advertising takes a hit. And people say, well, look, yeah, the advertising market's still not good. I know, but when you realize now this is all priced in, we're looking now, they're going to achieve growth in 2025. You're looking now, so the markets tend to look as far ahead as they can, can't they?
Yeah.
So is this priced in? Well, when you say they are now generating, money, and they are, profitable, and they are, net asset per share is 150, and they're at 48 pence, you can pretty much say it's priced in probably, because
Yeah.
and the fact that it's rallied after, it's not rallied on a set of results. in the last 2 years.
Yeah, yeah.
Now it
And now
has.
it is. Yeah,
Yeah, yeah. So I think it's a very interesting one to watch because it can scale. It's one of those companies that can scale very quickly. The digital advertising and agencies and all that stuff.
yeah,
But it can scale very quickly, and they have some big clients, global clients. So I think it's one to watch. It's not quite an uptrend here, but the fact it's broken the 50-day moving average, it's now above previous recent highs, and it's not done that for a long time. So confirmation of trend really is above 200-day sort of.
yeah,
But
yeah,
it's starting to make a good move here. Like I said, just that signal that it's literally risen after results, and it hasn't
yeah,
done that for 2 years.
yeah.
So everything's sort of priced in, kind of thing. I think so. It's one worth because I know you like to look at outside healthcare. In fact, AO World came out with news today, didn't
Yeah.
they? How did that perform?
Yeah, no, very good. I mean, an AO, so basically it's a trading statement saying they're going to hit the top end of their
Oh, look at
guidance
that! Yeah,
on profit
look at
after
that!
tax, and it popped. I mean, look at that. It's up
Yeah,
12, 15% now.
yeah, 14.4%, and that's nice there because you see that almost. It's if it closes above that, previous pops was at £1. It's
Yeah,
now £1.3 almost.
yeah,
That's technically quite good, and even above that previous high back here, which was £1. So that you see that level they've had there is literally resistance at £1. To
exactly.
close above
It's
that would
been
be quite
tested
good.
a few times, but
Yeah,
it's never really been sustained. And I'm hoping this time it is. I mean, the share price now is 102, so it's cleared the 100 mark. It would be
yeah,
nice if it started to stay above 100. This stock, if you look at the longer history, it's just well, let's look at the announcement first. So what they've said
hope
is
so.
basically they're giving a range. So $1 billion in revenues about this. This is what we've always been saying about these retail. So online retailers, right? So AO sells white goods online basically, but they're moving into other areas like computers and things like that. But they really have a strong presence in the dishwashers and washing machines and things like that. But online delivery, so they have no real store infrastructure and overwhelming costs associated with that. But they had some trouble a couple of years ago in the downturn, cost of living crisis. They got caught out a little bit, and they did a pretty steeply discounted placing at around like 40p level. 40, 42p level, I think something like 43, I think it was. And that was it. That's the bottom there, if you see at the bottom of that chart.
Yeah, that's what. Do you know that's what I'm saying about pricing in now? No one would think electrical goods. They are, literally, it's discretionary purchases basically.
Yeah.
But there's a lot of. But you wouldn't think that would be rallying now. But you realise it's sort of priced in.
Yeah.
I mean, and they've restructured and all that, and that's happened. And the market now is looking ahead the next
Correct.
few years if it can. So
Exactly.
same with S4 Capital. They've had a restructure. They've literally got rid of about 2,000 employees. They've had a restructure, and it's still the price of the margin is going to get better. And so the market will try and look ahead. And so people saying now it's still gloomy for electrical goods companies. No, but this has happened. That's happened. That's in the rearview mirror.
No, exactly. And if you look at some of their history, these companies were trading on, say, 2 times sales, which is not a stretch. It's not a crazy, so 2 billion market cap businesses not that long ago. Now they're 500 million market cap businesses just because because of the markets. You know what I mean?
Yeah.
So in a better market, you can see how the multiple expansion can come back. And meanwhile, the company's delivering. So company keeps delivering. The last time they upgraded forecasts, they did it 2 or 3 times in a row. So they're saying at least the top end of their guidance in PBT in terms of pre-tax profits. So it says they're 28 to 33. So they're going to hit 33 or more. And the last time they did that, they had to upgrade more than once. So you can see how this business will be doing. In not too distant a future. They'll tip into the 50 to 100 million sterling PBT. And revenues have returned to growth, so that's another thing. It's like the cost of living crisis behind them now. In a better market, there's multiple expansion on top of that. So I kind of bought into this stock a while back on the view that the restructuring seems to be working. Their balance sheet is fixed, and then the historic highs show us what's possible in an upturn. Now, obviously, I would like to think the upturn would have come a lot faster. It's slower to come, but meanwhile, they're just chugging along, delivering. So if you have the tailwind of a proper market, you can see this thing double and double again.
Well, do you know what? Talking about the market at the moment, I mean, there's been a couple of companies. In fact, it's almost accelerating. These, there's two areas here. Pre-revenue companies who need to raise money still finding it very difficult, and they still will for a long time, I believe. But anyway, before I go on to that, it was quite interesting here. I was talking about the 50-day moving average back there with SFOR Capital. So it broke it here, AO World, 7th September. It broke it here. Then it sort of hit this sort of almost 50 pence. Nice round figures. Technical analysis. People like round figures. But then it bounced on 50 pence a couple of times, then broke up there on the 11th of November. That was sort of time to buy. It came back down, tested that level. In January, then all of a sudden above the 200-day moving average, which is seen as the sort of bull bear line, and then slowly grinded up nicely. Look at that, a series of higher highs, higher lows, and then it hit that £1 level, and now it seems to have broken out again. So it may have to come back a little bit, but the fact it's going in a new range should see more upside here. It looks good on a technical basis. But by the way, looking at so in your area, I think it was yesterday, C4XD, which I've held in the past, by the way. Announced their proposal to delist, aren't they?
Yeah, it's quite disappointing, quite frankly. I mean, and then Biotrol this morning announced the delisting. They're not in the same area. There's just broadly speaking, one's in infection control, one's in drug development. But it's kind of sign of the times. The markets have been very difficult, and a lot of these companies, I think, are losing or don't see the purpose in being listed anymore because the markets have been so punishing on their shares, right? C4X has been delivering. They've struck agreements with the likes of, I think it's AstraZeneca and others. So they've done well as a business, and they believe that their shares don't reflect that, which at some level is fair enough, I guess. But, the world's markets are all kind of struggling, all small cap markets everywhere. It's true that NASDAQ in the US is had a bit of a rally, and that's true, specifically for the large cap stocks. The small caps I think the jury's still out. I wouldn't say it's been a broad-based rally in healthcare on NASDAQ. So I don't know. Some companies making decisions, they felt that delisting, just reading the announcement, as based on the announcement, that it was the right thing to do. We'll see.
Yeah, well, the thing is, I did say last on the webinar, I said, I largely in the bull market, I'd say 90% of my portfolio is loss-making companies because interest rates were zero, raising money wasn't a problem, and future potential was where it was at. These kind of companies were rallying like crazy. But I said the environment has changed now. If you're still playing that game and most of your portfolio is loss-making stocks, you're going to be in trouble. You've got to diversify now towards, and mine are now switched to 80% now are my profitable companies, and I've got the odd couple that are pre-revenue with decent cash. But yeah, because with companies like this, like I said, the share price will take their valuation doon, and the rumor they have to raise money will take the valuation down even more. They have to raise less money and a bigger discount, so it's punishing for them. So if they go private, I suppose they won't have that issue where they keep saying, well, you say you should be valued at 100 million, but your market cap says you are 20 million, so you can't raise money. So it's that difficulty, isn't it?
Yeah, but I don't know what the answer is. I mean, 2 years, 3 years into a downturn, if things pick up, then you've delisted at the bottom.
I think that as well. If they can hang on to the money, because it may take a while. I think this year definitely, when we are almost the smell of interest rates coming down. We can pick up on it, and I do think they'll probably come back to the market when it's a bull market. But I'm thinking what they're going to go private, raise some money maybe, and maybe let the environment settle down and be more liquid and be more affable for sort of fundraisers, and they may come back to the market when it's a bull market. But yet you are right. It is. We are. I mean, just look at the AMOL share. It's like I said, we're off the bottoms here. This was the bottom was 26th of August. Okay, it'll take a while, but it's still bouncing and trying to get above a 15 moving average here. So that's quite nice. It's not. I do think that's the bottom. I really do. And just because central banks are literally within months of reducing interest rates, and that I'm not saying it's going to go straight back up, but that will help liquidity. It will.
Yeah, I agree. And look, it's everything always feels bad at the end of a downturn. Isn't the psychology of the end of the downturn one where everyone's giving up? And companies clearly are giving up. There was another delisting this morning. So these companies are giving up. But that to me is kind of a sign of a turn.
this is my friend who says, be careful you're not, and most private investors, people are not in the market on a daily basis. It's been very depressing the last 2 years, but people are not in the market on a daily basis, a sort of passive investors to an extent, invest in the rear view mirror a little bit, and they look at how bad it's been, and just get out. And that's, and rather than say, hang on a sec, look ahead a couple of months, it's going to get better. It should get better, even from the central bank perspective. And they hold the levers for liquidity, let's be honest. It's going to get better. And so try and look ahead. Don't drive through the rearview mirror because, it's been awful, isn't it? Aim all shit. Look at that. This is going to be one of the longest bear markets. It's longer than the Great Financial Crash. It's been, there was the sort of, that's how far we are down. Yeah, then 49% from the high aim, 50%, and it's been how many days now? It be down here, literally 648 days.
I mean, it's a shocker when you think about it. It's very, very long. And some believe, there might be, and this is some of the talk around these delistings, is that the UK markets are structurally broken, and we're seeing IPOs going to the US, but I don't know. I
don't believe that.
I don't believe that exactly. I just don't believe it. Everyone always in investing, the words you never want to hear is it's different this time. Yeah. Well, no, it isn't. It's never different this time. Every single time things come back, and it's true that the investor profile might change of the people investing. But wherever there's value, capital tends to find the place. You know what I mean?
You're right. There are stocks rising, doing well. I've had a few in the last 6. I've had a few nice rises, and this is the market function. This is how it works. This is the feast and famine in the market. We're in a bear market. And people say, "Oh, it's broken." No, this is a bear market. People don't want to invest. Outflows happen. Everything dries up. And all of a sudden, it's the rain starts to get. In fact, it's raining here non-stop. But it's almost like on the plains of Africa where there hasn't been any, or in Australia, somewhere out back where there hasn't been rain for like 2 years, and all of a sudden it starts to hammer down. And so it does happen. It will come. I saw a documentary once on a farmer there in Australia, in the outback. It hadn't rained for like 18 months. There had a couple of droplets, and they believed it was never going to rain again. And all of a sudden, within 2 months, it hammered down for like 2 months. So it does happen, and it's as simple as that. It will happen. The liquidity will improve, and it's almost when people are saying it's broken, it's never going to get fixed. That's almost signifies the bottom of the market to me.
Yeah. Definitely. It feels like that capitulation moment, but then again, we said that a year ago. It's a year. It is a particularly long one.
Let's look at another one here, tissue Regenix. I'm going to put these on. The trouble with these, they are on a what's it called? They report in dollars, don't they? Which is a little bit of conversion needed here. But if you look at the last set of results, the growth. This is half year, this full year. Up to the 20, December just gone, 23rd. Growth is very good there. All metrics improving pretty much. And value there, they've got a net debt 1 million, but otherwise healthy. What's the broker forecast? And then 90% up. This broker forecast is that your forecast? 120. But 120 there.
No, we don't. I don't think we don't have a forecast for this one.
Okay.
But definitely, look, the company is doing well. We discussed it last week or 2 weeks ago. This is one of these, to your point about stocks that aren't in the category of needing money. This company does not need money. It's moving into profitability. Its revenues are growing 20% per annum. They're in a market that has the potential for them to keep doing that for years to come. They're now on the in my opinion, they're now on the radar of some larger companies to come and acquire them. I don't think that's going to happen overnight, but it's definitely this profile of company that fits into other companies because of the nice revenue profile. You register on larger company radars for acquisitions when you're a proper business, and that usually is in the tens of millions. So 30 million is what they're hitting now. That's just about the right size of being a good acquisition target. But I don't think that's going to come this year. I think the company still has room to grow, and it would make sense for it to continue on this trajectory for a bit, because currently it's like, I think, 45 million market cap business, is that right? something like that. It's about a 40-45 million market cap.
Yeah, 44. Yeah, 40. You are right. 44.4. Yeah.
So it's trading on less than 2 times sales. It's about 1.5 times sales.
1.9.
Yeah. So this in a better market could be 4 times sales, right? So there's room for this one to continue. But I see on your charts there, what are your kind of recommendations on this based on this chart?
So it's nice. It hit a low there. That often we get that V-shaped sort of bounce there. It can be a technical bounce and has to come back down. But as you see here, I mean, just what you're looking for, and this is higher lows, higher highs, because it means it's rallying to new highs because people are buying it up. When it sells off, people are coming in and buying, and so it doesn't drop to previous lows. So this is all about supply and demand. It peaked out here, came down into a nice range. From May 23 to January 24, and it's broken back up again now. You see pretty much there that 68, it needs to sort of break that 68, 70 pence to give up. But the fact is, this is the kind of thing what AO will probably do, is break up, come back a little bit, just bounce along the top of that last sort of resistance, and then hopefully move back up and break new ground. So it's looking decent. So it's in a new range. It just probably needs to get some more positive news out, and then it'll probably move higher, I suppose.
Yeah. Well, a steady grower. I mean, 3 years in a row of 20% plus revenue growth, which is good. Yeah.
All right, marvelous stuff, Vadim. Thanks for that, fella, and we'll speak to you next week.
Excellent. Thanks, Justin.